So now for the interest expense, we can just make sure that hit F2 for this with brackets, make sure that it's a negative since it's tax deductible. So we have that as a negative in our income statement since it is tax deductible. So this is one of the benefits of issuing debt because of this tax shield that we have here that enables this company to pay lesser taxes into the future. So essentially the government is compensating Amazon on any debt that is being raised by having that interest on the debt tax deducted so that they'll be paying lesser taxes in the future. So we already have that set up in place now. And then for the other income and expenses, we already have these were the changes in marketable securities. We already calculated that. And now we can come back to conclude on the basic earnings per share. So in this case, we will just make sure that we'll link to, let us link to our let us link to our raw data tab and just grab, let us link to the raw data tab. Let us go down to the income statement. Let us grab the weighted average shares used in computation of earnings per share. Let us grab the basic and the diluted. Feed and we control D. Feed is right to the end of the historic period. Let us calculate here, let us determine the basic earnings per share and the diluted earnings per share. So we take the income generated in that period, the net income, and we divide that by, make sure that we reference the cell with F4 2 times, and we divide that by the basic weighted average shares used in computation of earnings per share, and also the diluted weighted average shares used in computation of earnings per share. So we can fill that formula down with Control D and fill this right with Control R. So we have that set up in place there. So later on, when we come back to add any shares that will be issued in this period going forward for the focus period. So we're going to be coming back to add any shares that will be issued if there was any shortfall, if Amazon will be raising capital as a result of that. So we'll be adding whatever shares will be issued from that to the basic weighted average shares using computation of earnings per share already. So we're going to be adding that both for the basic and the diluted. So let us complete the other part of the model, what was left. So we go to the balance sheet section, and here we see that we have the property, plant, and equipment. We already summarized this at the bottom of the supporting schedules under the finance leases. So we can go down to the finance leases and we grab here the total plant and equipment balance here of roughly $146 million. Remember that this also included balance for the PP&E. So this is both the balance of the PP&E and the right of use of assets under the finance leases. So we get the ending balances, which we already summed here. So we have just this one cell here. We can fill this right to the end of the projected period with Control R. And for the operating leases, we can go down to the operating leases. Right of use of, let us go down to the operating leases. Right of use of assets, which was just a plug, as we determined a while ago, from the finance leases. So we just have that in the balance here. We can grab that operating lease right of use of assets and include it on the balance sheet. Remember that these operating leases only came into the balance sheet for US cap companies in the year 2019. Prior to that, US cap companies followed the income statement approach to operating lease accounting. So we have that operating leases total balance kicking in here as a result of the new regulation that began in 2019. So we can fill this formula right to the end of the projected period. So we have the set there. So under the balance sheet, the liabilities and stockholders' equity side of things, let us determine here we have here the long-term lease liability and the long-term debt. So let us bring that, which we already determined a while ago from the supporting schedules. So for the long-term